Hello again, Brian Corbett here, Flagship Property Management. This is our second video with Wesley Barnes of Union Bank talking about our commercial lending, working with a local bank and how that can benefit someone. This second video is going to touch on multifamily investing and commercial banking, portfolio lending if you will, combining several units or buying more than just one unit, a small apartment complex, a quadplex and so forth. So I hope you get some good insights here. So if someone has a couple of properties, or say they do want to look into a multifamily, a quadplex, a 10-unit apartment, or say there's maybe a small portfolio they found, someone's got 3 to 5 properties they want to sell as a package,
right,
and give them a deal on that package, how is portfolio commercial loans with Union Bank right now?
Yeah, so I mean, again, it goes back to whether it's one deal or 5 deals into a deal or a multifamily facility, it's still going to fall back into that bucket where we're going to need some cash into the deal. We want to see some skin in the game.
Okay.
We want to make sure it has that cash flow as the primary sources of repayment. We do indeed look at secondary sources of repayment. As you noted a second ago, we want to make sure that you're doing your best to pay your bills,
right,
and that you know what you do from 9 to 5 satisfies your personal liabilities. But absolutely, you know, I do that a lot. I look at portfolios, and if one deal comes to the table for me, and I analyze that client's financial statement, and I see that there's an opportunity to restructure their portfolio to give me some more business, and more importantly, to better their financial situation, then that's something that I would hope we all would want to do.
So it might be a conversation that you could have with them if there's an existing loan that they have on another piece of property or something, where if you could wrap it all together,
yes,
there's a chance they could actually have a lower payment,
yes,
net increasing their cash flow,
right,
and benefiting everybody in the process.
And you know this as well as I do, Brian.
One payment, multiple properties.
Oh, listen, people like that.
That is great. Yeah.
People like that. It's easier to make that one payment.
That's right.
But just as you have the ebbs and tides of rates.
Absolutely.
And one thing that I think is very important to know is that with our institution, we do not price a commercial deal the same as a standard mortgage.
Okay.
When people think about a standard mortgage, they think about a 30-year loan.
That's right. That's right.
On the commercial side, we don't do that. We don't necessarily think, in most situations, that your investment needs to be a 30-year deal.
Right.
You know, so it's going to be more tailored to a 15-year amortization,
Gotcha,
or a 20-year amortization. And within that time frame, you're going to have commercial balloons, where the deal is going to come back up for renewal. The banker's going to want to analyze the client's financial situation, analyze the rate. If the rates have gone up, your rate will go up. If rates go down, your rate will go down. And a standard investor will that's second nature to them. They
Sure.
understand that.
So that may be a situation, Wes, that during that 5-year period before the balloon comes up, an investor that dabbles his toe in it or has multiple properties may have picked up 2 or 3 others, and during that 5-year period, they may have come back to you and said, "Hey, I've now got 4 of these loans with Union Bank. Let's talk about my options with a portfolio. Is there a way we can wrap them all into one, increasing my cash flow, reducing my payment? I've only got 1 payment versus the 4, and at that point in time, that balloon period would, in essence, and correct me if I'm wrong, start over again."
It would. Now, there's costs associated with doing that.
Absolutely.
You know,
You can't refinance for free.
You can't refinance for free. That's exactly right. But you have to kind of do your T-graph. You have to look at your pros and your cons.
That's right.
Compare and contrast the situation. You know, if rates were 7% when you did your original deal, and then they've gone down to, you know, 4.5%, it might be worth spending that extra money. And as you said a second ago, it might be worth bringing it all together for the simplicity of it. That happens often.
Okay.
People like that. A lot of people like simple. I like simple.
Yeah,
you know,
too.
so
Yeah.
and you know this as well as I do. I have income producing property myself.
Gotcha.
You know, I'm not a huge investor, but I believe in rental property in Pitt County. I believe it's something that will stay around for quite some time because of the reasons we talked about earlier.
That's right.
I believe the hospital provides that opportunity. I believe the university provides that opportunity, and I know that Union Bank provides the opportunity to do that financing.
That's fantastic.